Hello, I'm MaryAnn. With the crisis in the Ukraine, we've seen a lot of volatility in the markets, and none perhaps so apparent as in the commodities sector. So I've asked Bart Melek here with me today. He's head of commodity strategy at TD Securities. We're going to talk about the top 5 commodity movers this week and what's going on in the market. So let's start with your first one. It was oil. What happened?
Well, oil reacted to the upside actually quite violently, particularly Brent, after the news hit the wires.
Which is the European one.
It's the European version and the one that is benchmarked in Europe, and certainly the Russian crudes are benchmarked against it. When the news came out, oil automatically went higher, and of course the concern was that supplies out of Russia, which incidentally is the world's largest producer, could be interrupted, and that of course is a very good reason why it would go up.
And a lot of it goes through the Ukraine, right, to get out?
A lot of oil and natural gas goes through the Ukraine, and you always face the risk of some sort of sabotage or accidental disruption of flows for whatever reason. It could be something as benign as a power shortage, for example.
So is this temporary, or do you think it's going to be longer term effects?
Well, that's probably
a million-dollar question.
That's right, and one probably best answered by Mr. Putin. But certainly what we can say is the markets at this point are discounting this as an intermediate length event, and the market certainly isn't pricing in a crisis that's about to deepen. In fact, the market in recent days has likely assumed that this is going to get better and the situation will calm down.
All right, what about natural gas?
Well, natural gas, certainly the European traded gas responded violently as well. Europe imports about 30% of its natural gas from Russia, and that too flows through the Ukraine and was at risk. So both these energy commodities moved to the upside. Incidentally, both of them have come down quite a lot. Certainly WTI and Brent are off also because inventories in the United States grew. Okay,
so I was going to ask you that next. Then what's the effect on the West?
Well, the effect on West is on the West, well, depends how far west you go. If you go west of Ukraine, you have the EU. The impact certainly would be negative if we saw a prolonged period of elevated energy prices. That, of course, leads us to base metals and industrial metals, which initially dropped off in price. Ones that are very dependent on its supply from Russia, like palladium and nickel, did the opposite for much of the week. As we speak today, all of them rallied. We had a relief rally on the more benign news out of Russia and communiques by Mr. Putin that he will likely avoid violence if at all possible. So that has calmed markets down a bit and gave a chance for base metals and other industrial metals to do well.
So for example, we saw palladium kind of do a rebound, but with Russia, they're the key producer of palladium. Is that not the case?
That's right. They produce some 42% of the world supply. And any disruptions or even sanctions against Russia could trigger perhaps even retaliatory action by them on energy, on other key raw materials, and cause disruption. Certainly oil is the big one. Palladium less so, but it would be relevant for the auto sector, for example.
And the lesser, or if you call them lesser base metals, the copper and the aluminum, same idea?
Yes, the general trend was similar. They traded off or down when the news about Russia came in, and that was on the fears that the global economy may slow and that geopolitical risk may destabilize economic activity globally. And of course, we still have an issue of sanctions hanging over our heads, which could slow the global economy and thus demand for base metals. We did see metals drop. Now they've moved up on the easing of tensions, and I think at this point we're waiting.
All right, and gold, last but not least, the safe haven.
Well, gold did very well. Certainly better than we thought. Gold moved towards recent highs of around 1354 or so, and this was the quintessential safe haven bet where markets decided to buy gold along with treasuries and US dollars to guard against any sort of instability. Surprisingly, the euro performed fairly well as well. Certainly didn't correct very much, as much as I would have thought it ought to have, it should have.
All right, and you always hear in connection with gold, price manipulation. Do you see, do you have comments on that? What's going on?
No, we don't believe that there is any price manipulation. Ultimately, it's as far as we know, it's a fairly competitive market where supply and demand and financial positioning determines pricing.
All right, thank you very much, Bart.
My pleasure.
I've been joined by Bart Melek, Head of Commodity Strategy at TD Securities. Thanks for watching.